What's up everyone, it's Scotty with MoneyVest. So in this video, I'm going to give you guys an update on Tesla, NIO, Palantir, and SoFi. We're going to talk a little bit about Tesla's price cuts, Palantir's new partnership with the UK NHS, which again is not confirmed, but it is speculated that they are going to confirm that very soon. And also talk a little bit about NIO, which has obviously been not performing very well. Year to date, the stock's still down over 14.5%. So, and of course, talk about SoFi as well as student loans continue to resume. That represents a big opportunity for the company when it comes to refinancing and obviously once again re-accelerating towards those revenues and profitability as well. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. That's all I'm asking in return, is that you drop a like, subscribe, and link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, members only private videos, Excel spreadsheets, our stock reports, everything is going to be included. And the link's going to be down below, and we'd love to have you on board. So first things first, Tesla here once again cutting prices on the Model 3 and Model Y in the US after the car deliveries fall. So it's kind of interesting how, a lot of these headlines kind of try to paint a specific company in certain light, whether it's positive or negative. Car deliveries, yes, indeed fell like on a quarter-over-quarter basis, but year over year they were substantially higher, and it's always a year-over-year comparison because markets and everything else is seasonal, right? So third quarter will always be compared to third quarter last year as opposed to second quarter this year. Although I do understand why they do this, but it's kind of funny every time kind of reading some of these articles. So the starting price of Model 3 is listed at $38,990 on Tesla's website now. That's down from $40,240. And the long-range Model 3 fell from $47,240 to $45,990. And the Model 3 Performance fell from $50,990 to $53,000. Fell to $50,990 from $53,000 as well. And Tesla's Model Y Performance Sports Utility Vehicle now starts at $52,490. And that's down another $2,000 from $54,490. So, we know that Tesla has been trying to spark some demand with the lowering prices, and that's obviously affected the margins for the company. The third quarter earnings are going to be released later this month, so we are going to get busy, really, really busy here with the earnings season. But the way I think about it, this is very, very much long-term, and some short-term price cuts and these hiccups are not going to affect Tesla over the long term as it continues to kind of builds its install base, and of course, builds its brand and allows people to have as many Teslas as possible so that they can take advantage of other services when they roll them out, whether it's FSD, whether it's, energy, battery packs, the autonomous driving, and the Optimus robot, supercomputer. There's a lot of other things that Tesla's main focus is going to be over the next 5-10 years. EVs, yes, it's one of the most efficient electric vehicle makers in the world, and if they are able to lower prices, that makes them even more competitive against the competition, and that's only going to benefit Tesla over the long term. That's in my opinion, that's my analysis, that over the long term, I think Tesla is going to be just fine with respect to these price cuts. But yes, in the short term, that's what Wall Street looks at. They look at margins, they look at profitability, they look at earnings, and if price cuts keep coming in and margins continue to see a bit of a pullback, that's not going to be good news in the short term, again, according to Wall Street. And it's possible that we do see some sell-offs and some downgrades and some down ratings on Tesla. Now, Tesla stock was down pre-market, so it was selling off, but then it quickly got bought up very, very well. So it was very, very flat on the day, up over 18 basis points. This right here is a more zoomed in version where what you'll notice is that we are still very much in a context of both an uptrend and a downtrend. So what I mean by that is that if you come over to this right here, so this is the higher highs and the higher lows. So this is the overall chart within which Tesla's been trading in, right? So that's the uptrending channel. But we've also got the context of a downtrend within the uptrend, which is going to be over here. Now, we didn't quite sell all the way down to this lower low, right? So that would have been the price point at around $200 and $215. So we didn't quite get down to that lower low. Instead, we got bought up really well at that higher low, right? So higher low being inside this uptrending channel, right? So we came down, we got validated here. And the next possible resistance is going to be all the way up here. That's going to be sitting roughly, I want to say at close to over $350 per share. So that would be a pretty significant price and a very nice rally for Tesla. But of course, time will tell if we can actually break out to those levels, break out above 280, break out above 300 moving forward. So that's going to be a big resistance for Tesla. But nonetheless, buyers were present today. We saw a lot of buyers step in from those lows. And of course, Tesla ended up green on the day. And this right here, again, is a little bit of a zoomed in version of the analysis. So once again, we are, getting validated very nicely over here at around $240. So that right there was that support level that we talked about in our previous videos, but we are still very much in the context of this. So I wouldn't write this off just yet. And we're coming up to a big resistance here that, again, we've gotten rejected a couple times, and that's going to be sitting roughly at around $280. So first level of resistance, basically just call it this area. This range is where there's going to be a lot of supply. Like Tesla's going to be meeting up with a lot of supply and a lot of resistance at these prices the moment it gets up to over $270, $280. So those right there is the range within which I could expect Tesla to come up to a lot of resistance, come up to a lot of supply, and then it's going to be very important for us to see whether we break out of this resistance or get rejected. If we do see a rejection, then of course, support level is going to stay up at $240. That's going to be intact. But in case we get with a breakout here at those levels, then the next possible resistance is going to be all the way up to 300s. That's going to be in line with the most recent high and the sell-off from June, July, right? So that's pretty much the level that we got rejected at, and since then we've just been selling off. So that's the analysis, technical on Tesla here. Very basic, nothing to go crazy on right now. We're seeing some buyers step in intraday, but those are going to be some levels to watch. Now, NIO provides September and third quarter 2023 delivery updates. So NIO did deliver, quite a few vehicles in the month of September and the third quarter. So 15,641 vehicles in September, increasing 43% year over year, and delivered over 55,000 vehicles ending in 3 months in September. And that was up 75% year over year. So these numbers are fantastic. Cumulative deliveries reaching almost 400,000 as of September 30th, 2023. So, nonetheless, needless to say that these are very good numbers from NIO on a year-over-year growth basis as well. But the problem, again, remains profitability, right? There was another article that was published literally yesterday that talked about that the car maker that loses over $35,000 per car. So Chinese electric vehicle companies like NIO are pulling even further ahead, partly through government support, but also through rapid technological advances. But the problem is that, the company employs over 11,000 people in R&D, but sold mere 8,000 cars per month from April through June. It has invested extensively in robots that one of its factory employs at just 30 technicians to make 300,000 car motors a year. And NIO offers a $350 augmented reality glasses for each seat in its car, and has introduced a cell phone that interacts with the car's self-driving system, and none of it's profitable. Far from it, NIO lost $835 million in the second quarter or $35,000 for each car sold. So that again is a bit of a concerning piece, right, for NIO. So profitability has always been a bit of an issue for the company, so that is something that we have to keep in mind, and that's one of the reasons why it's been a little bit more hesitation for me to actually see a future for NIO where it's consistently profitable unless they show me otherwise, right? That's been kind of the analysis, and it's been struggling, and I think rightly so, because they've been doing some share issuances, they've been doing convertible note bonds offerings, they've been doing a lot of different things that obviously is hurting the sentiment, the perception, and of course the long-term profitability outlook for the company. So if you come over to the technical analysis, this is where we are. We did see a very nice falling wedge pattern and then got a huge breakout of over 121%. Since then, we've just sold off another 50%. RSI at MACD was very overbought, so we're coming right back down. Support level is going to stay put at 730 for NIO, and resistance is going to stay put at 950. And this right here is the gap that we need to fill, and all the way up to 1060, 1065. For NIO as well. So obviously coming back down to almost a new 52-week low at sub $9 per share. We've got a gap here. We got a resistance up to 950 to as much as 1050. Are we going to get up there? Time will tell, but NIO right now, unfortunately, from a fundamental standpoint, looks really weak. This is about the weakest it's ever looked from a fundamental standpoint, and quarter over quarter losses continue to get bigger and bigger, unfortunately. So technicals right now, we're just kind of trading sideways, waiting for what's going to happen next. But market cap's just a little bit over 13.5 billion. and range is going to be 730 to 950 for NIO. So now when it comes to Palantir Technologies surges on potential NHS contract and a partnership with PwC, so it's experiencing a surge in the stock price on allegedly due to reports of an imminent contract with the UK's National Health Services for a major overhaul and an estimated contract of worth over $579 million. So Palantir is kind of like the opposite of NIO right now, where, you know, NIO is kind of struggling and of course generating losses after losses. They're getting bigger and bigger. Palantir is kind of like on the other side of the spectrum, where they are actually doing well. They're doing better, and they are turning the corner towards profitability really well. And you know, it's expected for them to, you know, perform in terms of margins and lower share dilution, excellent balance sheet. And this right here was the technical analysis. Now, I'm gonna admit, I was expecting a little bit of this breakdown from this head and shoulders, considering how weak the NASDAQ was, and considering how much of a sell-off we've seen from the markets in September and, you know, in August. Palantir surprised me. It really did, because if you take a look at where we have been in August and September, Palantir is actually up 19 to 20%, right? So it's actually been trading in that range for quite some time, with a resistance of all the way up to $16.90 to $17, and a support level is going to stay put at roughly around $13.75, close to $14 per share. So this right here is where we are, and of course, if you do end up breaking out above $16.89, the next resistance is going to be all the way up to $19 per share. So this right here is going to be that level, all the way up to $29, which again is going to be the levels from back in 2021. But first thing at one thing at a time. So near term resistance $16.89 all the way up to $19, with the support level is going to stay put at $13.75. So this is going to be a very, very important level of support. And I gotta admit, I was expecting a bit of a breakdown from this head and shoulders, but we didn't quite get that just yet. So Palantir definitely has surprised us with an outperformance relative to the market indexes like S&P and NASDAQ. Now going over to SoFi, last but not least, SoFi did break down. So SoFi did not validate the head and shoulders like Palantir did. It did break down below this support level at around $7.99, $7.95, close to $8. Pushed right back up, got rejected at that resistance at $8, sold right back down, and of course this right here is the resistance that it's retesting right now, and support level is going to stay put at 651. So very, very important level of support for SoFi at those levels, and resistance is going to stay put at 785, 790s for SoFi right now. If you do get a breakout back above this level, so right now we're just trading at sub $8. If you do get a breakout back above this level, the next resistance all the way up to $10 per share for SoFi. So I hope you guys enjoyed this video and a complete update on the 4 stocks here. As always, if you enjoyed it, make sure that you drop a like, subscribe to the channel. Link to our Discord, Patreon is going to be down below. And we'd love to have you on board. Have a great weekend. And as always, happy investing. I'll see you all in the next video.